Welcome to another day in the Matrix. Waters above crypto. We're seeing green candles across the board for these cryptocurrencies. A nice uptrend as we expected, as we should continue to see bullish momentum moving into next week with the new moon solar eclipse on June 10th. This will be a classic Wyckoff method reaccumulation schematic that I've been anticipating to play out over the coming months. And today we're going to go over a short-term Wyckoff accumulation schematic I see playing out for Bitcoin and how it will affect the cryptocurrency market as a whole. We'll also take a look at the XRP chart and go over some short-term price targets. So if you're new here, we do cryptocurrency technical analysis and combine it with the esoteric science of Gematria, Numerology, and Astrology to understand these markets. If you haven't already subscribed and you like what we're doing here, feel free to subscribe. Give this video a like and share this channel with other conscious people to help grow this community. And for those of you that want to learn how to do technical analysis and combine it with Gematria, you can join my Mastermind course. There's a promo code in the pinned comment below for the month of June. You can qualify for that promo code discount by becoming a Patreon supporter of the Mastermind community membership. Link to my Patreon is in the description. And to get in contact with me for access to the course, my email's in the description box as well. And since the new month of June has started, this is just a reminder, if you've been waiting to become a Patreon supporter, the Patreon is now open to join. I greatly appreciate all of your support. And with that being said, let's take the red pill. So, we're just going to jump right into it today with the Bitcoin chart on the daily. And we're just going to show how we've been getting consistent higher lows as we move up all the way since the crash on the 19th of May. And the one thing that I think is really interesting is how we keep getting lower highs in regards to the candle bodies. So for those of you that don't know, the wicks that you get on these charts are actually just highly volatile moments that are typically created by leverage, because we're in an over-leveraged market at this time, in a historically over-printed economy in terms of fiat being printed at the most absurd levels historically. This allocates a lot of money to enter this space on leverage. Now, with that being said, if you ever wanted to make these charts look a little clearer, you can go over here to the candles and you could select area. Now, area gives you a nice understanding of what's going on without all that added volatility. But since most people are used to seeing candles, we're just going to work with that today. I remember in my first week of making YouTube videos back when I was just getting started with it, I was only working with the area chart. I was using that mostly for my course as well. And it was because it was a lot more helpful for people as beginners. These candles make it very, very difficult for people to understand how to create patterns. And you guys have probably noticed by now that I like to focus on Wyckoff, which it's horizontal trading ranges. Pattern trading, where you have pennants and triangles and head and shoulders and all of that stuff, that's really hard to utilize when it comes to cryptocurrency. So although that stuff is really valuable in, let's just say, Forex, the traditional markets, and maybe even the indices, it doesn't really hold too much weight in a market that's this volatile. Again, cryptocurrency makes moves in a single day that it takes the S&P 500 years to make. So just a little disclaimer for everyone, if you're newer to using charts and you've been sort of having issues lately with drawing trend lines or patterns or whatever, it's because these wicks are really difficult. And I would also consider for people, never use less than a 4-hour chart when you're new to charting. Anything less than a 4-hour chart, especially if you're considering wicks, is going to definitely get you off track, and it's going to make it extremely difficult for you to learn. You're just going to be all over the place. You're not going to have consistency. So that being said, the daily close that I would like to see for Bitcoin for continuation to the upside would actually be a candle body close above 40,000. So 40,000 is good because you can see that the highest candle body close since this downtrend is 39,300. And let me pull up the 21-day EMA. So the 21 exponential is sitting right here about 40,600. Ideally, that would be the pivot point that would continue us to the upside. So until Bitcoin closes that 40,600, again, it might take a couple more days. And as we trade below this exponential moving average, this moving average will move to the downside. So it will probably catch up with that 40,000 area in the next maybe week. And then by the middle of next week into leading up into June 10th, which is the solar eclipse, I would expect that we get over this EMA and we see a short-term bullish move to the upside. Again, I've been calling for a bull trap, so I'll break that down in a little bit. And for now, we'll just kind of focus on what we're trying to get in the short term. So as you can see, this blue EMA, which is the 13, is showing us resistance today. It is the first day we've touched this moving average since we dropped back on May 12th. So this is actually pretty nice to see. And another thing to consider here is the fact that we haven't been trading into this 21 ever since we dumped as well. You can see that we had the moving averages all coiled up back here, and now they flipped. So the way that this should work in a bullish perspective is the blue should be above the orange, which should be above this red. That would be the 13 above the 12, above the 34. You guys might have seen other YouTubers or other analysts use something called an Ema Ribbon. Again, it's just the flow of the moving averages, but people need to remember that moving averages in RSI and MACD, these are lagging indicators. So that's why when I do my TA, I like to also include Gematria and astrology to be able to understand exactly what's going on here. Also, like pagan calendar holidays, that works pretty well. We'll talk about that a little later in the video, but for now, this stuff is valuable, what I'm going over right now. So until we get that 21 EMA closure above, we're probably just going to be slowly moving to the upside in some sort of a rising wedge pattern, and that's not bullish, okay? So all of the shit that I'm seeing in this market right now is telling me that we are not ready yet to start seeing a higher high. We are just going to be ranging for probably the next 2 months, and it could be as long as 4 months. So a lot of people don't want to hear that. They want their favorite crypto to just go to the moon, but you got to understand, after you have a huge sell-off like this capitulation is actually really good because the sophisticated money in this space is accumulating, and this is the best second chance you've gotten since all the way back here. Right here in September. And I believe that when we're done with this whole accumulation range, you're going to see a similar pattern to this form. This will just take longer, but I think it'll still break out around the same time. You'll start seeing new higher highs around October. Almost every single October during a bull run is bullish, okay? It's that moment of this fall time and the summertime that's pretty bad. And it, we have that classic saying in the markets, sell in May, walk away, kind of one thing to consider. But anyways, so the obvious resistance I would anticipate is this curve. So this curve has been, believe it or not, almost a full half a year long when you measure from end to end. So it's about almost 180 days, this curve. And I believe we've been trading on this curve now for over, so almost 150 days. Now we're approaching almost a half a year in this arc, and this arc is actually a distributional top, but it's not the end of a bull run. It's just this distributional top will lead into a larger reaccumulation schematic that we'll go over. And I'm going to get into the short-term accumulation schematic we could use to show how I believe we're moving into what's called a bull trap. Okay? So with that being said, let's just look really quickly on the 4-hour chart. We're going to get rid of this on the side. We're going to get rid of all of our indicators. And I'm going to show you without anything else on this screen what I'm seeing. So let's just assume recently back here you have your all-time high. Now we're going to go to this WYCKOFF accumulation schematic. Imagine this was your previous all-time high. You come down into phase A, which is called a selling climax. Then you have an automatic rally, supply test, and then this is the spring, some sort of spring action. Now, what I believe we are seeing is something around here. We are in the midst of entering phase D and breaking out of this structure. So if you can just draw a trend line from here down through here, and it looks like a pennant or like a triangle, if you could just visualize that for 1 second, I believe we are currently in the midst of breaking out of that and entering phase D. Okay, so you can see right here this pattern where it looks like a triangle forming right here. I mean, I could draw it out, but it's going to bring up all the other drawing tools. But something like this. So if you had a clean line at the bottom, it would be like that. Okay, and once we break out of that, I'm anticipating we're going to start to enter phase D, and then we're going to have this resistance line, and this resistance line is going to come in right here at 42,000. Now the reason for that is because that was where the automatic rally came up to. You see how right here it was a support, right here it was a resistance, and then it got bloody again. Okay, now we're just coiling up in this whole area. This matters because it's going to affect every single crypto. Trust me. So when we break out, now we're going to have to get above 41,000, 42,000, then back test this previous area right here around 40,800 right here. This will be around the time that we get above that 21 EMA on the daily, like I was talking about a little bit earlier. And then this breakout move that comes into phase E is probably going to be stopped out by this curve. Now, if we break this curve, that will be a over half a year pattern that we would be moving on from, and I believe that would be very nice to see. So the ideal move would be something like this, okay? We break out of the triangle, get above this 43, come back test this area right here, which is this previous top, get above our 42K level, move into the bull trap, maybe go as high as 50,000. That's a little bit bullish. Like, I don't want to be like bull boy at this moment, but this is just kind of how it could go, you know, just to give you guys a little bit of an idea. Then come back to this arc to back test the outside of this arc. Now this would be amazing to have happen, to confirm the outside of this arc as a support, because it's never been a support. It's always been a resistance, and it's been a multiple all-time high resistance. So back here on January 8th, you hit the all-time high of 42,000, correction. Came up to it, hit the all-time high of 58,000, correction. Came up to it, pretty close, but then right over here we see April 14th, 64,000, that's the current all-time high, correction. Then we moved into it again, rejection. Huge correction, okay? So we are now in returning back to that curve, I believe. And I think that this would be the most bullish scenario. I'm not counting on it though. What's most likely going to happen is something like this. We're going to come into the curve and then into the full moon of June, get a pullback, and then we'll break out of it moving into the month of July. It'll be a sideways breakout, not a bullish breakout. I don't see this market being very bullish at all. I know that there's like a Dogecoin listing on Coinbase and it's like up 13% today, but like guess what? Like Polkadot's also up 13% today, so don't get too excited, guys. Like seriously. I know like that might hurt people's feelings, but red pills only. So let's move on to what I see going on for XRP. All right. So what's going on with XRP I think is really nice right now, actually. We saw a lot of bullish macro closures over the monthly candle and the weekly candle like we discussed yesterday in yesterday's video. You can see low, higher low. It looked like we put in another higher low. Now what we're probably battling is some of our moving averages, so let's bring those up. Oh, we're on the 4-hour here. Let's go to the daily. Boom, yep. So remember what I was saying about how these moving averages are in a bullish posture. The 13 is above the 21, which is above the 34. This flipped. So we're bearish right now, obviously. But one thing to take note of is if we could reclaim this 21 and close above the 21, like I just brought up for Bitcoin, you're going to see, guys, like these charts move in harmony. So when Bitcoin closes above that 21, XRP is going to close above that 21. So you really only need the Bitcoin chart. It's amazing how that works, and it's amazing how people overthink that. So anyways, once we clear that 21, we are going to move into this 130 area and then into the bull trap, which could go as high as the 702 fib. So let me close out the EMAs and show you something else that could be going on, which is something called a W Pattern Breakout. So you have your W right here. And a W is denoted by a strong resistance at the neckline, which you're seeing, obviously, and then a low followed by a higher low. So when you get the higher low, especially with the candle bodies, this is a textbook W breakout. Now, we haven't broke out yet. The breakout would be denoted by a daily close above this neckline's wick. In my opinion, that would be, I like when it's on the bullish side to be conservative, and when it's on the bearish side to be like overly bearish, because that mentality that gets you to not be like a FOMO, like just super entering trades at bad times. So the long and short of this is a true W breakout would be followed by a daily close above this neckline, and then you come back and test the neckline, and then once you create the higher high from the previous rejection point, which would probably just be this 382, or it would be one of our moving averages, right? What you're going to see is a back test, and that back test comes back to the neckline and breaks out, and that would lead us to the bull trap. So how do we measure this? Let's measure from the top of this wick down to this wick right here. That would be the conservative target. Let's get it out of logarithmic and move that up to the top of that wick, and you're looking about $1.40 is your breakout target, right? So with that $1.40, I would anticipate a wick up to the 618, and that would complete the bull trap. You could go as high as the 702. That would be really that would get a lot of people to FOMO. It's the worst time to buy though, because you're basically immediately going to get rejected from that territory. Now, what would happen in the event that Bitcoin dominance continues to slip to the downside, but the market stays green for crypto? Well, if you could continue to get above this golden pocket and you get a daily close above $1.70, better a 2-day close, a 3-day would be even better, and a weekly close would be even better. Once that happens, this thing can go to new highs within a week. Now, do I see a V-shaped recovery in the cards for XRP? Absolutely not. Do I think that the SEC meeting is going to create a V-shaped recovery for the XRP chart? Absolutely not. Does Gary Gensler shaving his head tomorrow create a new all-time high for XRP? No. You see where I'm going with this? That's theater. It doesn't fucking matter. If Bitcoin goes up to create new highs, XRP will follow. Period. End of story. So I get like 100 comments a day discussing the SEC outcome. The SEC outcome doesn't matter, okay? Don't stop. Just stop caring about that. Move on. There's bigger and more important and more progressive things you could do in this market. You don't hate it. You don't date it. Just trade it. And don't get lost in the news, the broken compass. So the other thing to consider here is with this bull trap scenario, now you have to think about where we're coming to the downside. And that's typically the 236 fib. Anything breaking below the 236 fib with a daily closure would lead to a double bottom. Now, because this had a very drastic wick, I don't know if we'll ever see that price again in XRP unless Bitcoin gets back to 30,000. So Bitcoin wants to move up to like 48K, 50K, and then come all the way back down to 30K. You better believe XRP will be 70 cents again. I've shown everyone that for how many months now? That's just what occurs. Every time Bitcoin makes those very volatile movements, XRP follows. That's just the way it works. So one of the things that could be forming here is a massive bull flag, which this would be like the handle, this would be the flagpole. Now that's something that Theta is doing right now, and that would be pretty wild to see because the measured move would be a half staff, which we're in logarithmic right now, so that doesn't help. But yeah, I mean, this is a little bit too crazy to call it a bull flag. I'm not calling it a bull flag right now. I'm just telling you like this is possible. So this sort of breakout, once you start getting a close above the 786, you're going to start to see a $2 pretty quickly. Again, kind of just covers back for what I said before. But that's like a 10% chance at this time. What I see going on in this market is a bull flag, a bull trap, rejection around the 618 golden pocket Fibonacci. Then we come down and hopefully hold support on this 236. And then we just trade sideways through the month of July. Maybe a bigger dip into July, like to scare people out real quick. And then you create a massive trading pattern. It'll literally look massive, just like this one does, right? From 60 cents back to $2 down to 60 cents again. If I told you that XRP was going to go create such a big trading range all the way back here in March, you would have said I'm out of my mind. But this is just how TA works. This is how the charts work. So there's a couple things that are going on in the next couple days. We have open interest coming back to the market around June 5th. Then we have our new moon on June 10th. And then we have our full moon on June 24th. 3 days before that, we have this ritual. We have midsummer, pagan holiday, circling around the maypole. So that's kind of like what we're going to be moving into over the next couple weeks. I don't believe that the full moon that we're going to get in a couple weeks will be that bearish, but it will be overall bearish momentum. So the new moon we're about to get, it's not going to be like full-blown bullish. It'll just be bullish energy. Then the following full moon in July is going to be what I anticipate will be the bigger pullback, the big, really scary pullback. So we have about a month and a half plus to prepare for that. So not to get too ahead of ourselves, but I am letting you know. And anyways, with that being said, we're going to enjoy this next 8 days, 10 days or so of bullish energy. Prepare yourself if you want to de-risk out of this market a little bit before further correction. Again, I'm not telling you to sell. I'm just saying consider this scenario as the most likely one, that we move up bullish and then get rejected and then have a much bigger, longer, arduous trading range for months to come. If they can't scare you out of this market, they will bore you out of this market. Remember I said that. So anyways, those of you that are looking to join Patreon, patreon.com/watersabove. The new month has now opened. You'll be unlocking all of my exclusive posts. This week I'll be doing a bunch of work on reaccumulation schematics with WYCKOFF method. And I'll also be doing my red pill episode at the end of this week. Be going into some altcoins, deep diving into seeing how those are going to work out over the next week, over the next month. And contact my email in the description if you wanted to get onboarded into the Mastermind course. Give this video a like, thumbs up, share this video. Appreciate all of your guys' support. Enjoy the rest of your day in the Matrix. Much love.